right, hey, so good morning, everybody. Michael Childs here with Remax Liberty. I have Matthew Lords with Finance of America. Hey, so I know a lot of you have some questions regarding VA and some of the loan items that are involved with that, or questions or whatever the case may be. So what I did was I figured it'd be a great idea to have my preferred lender here, Matthew Lords, go over here and just answer some questions. Now, this is going to be ad-lib and kind of talking and just kind of...
we'll have some fun.
Yeah, we just want to be natural here, right? So if we mess up, we can just say it was just us being natural. So we'll move forward. I got some questions right here. Matt, you want to introduce yourself, say some things to the people?
Certainly, yeah. Matthew Lords here with Finance of America Mortgage. I've been in this business about 16 years. Probably about 25% of my business is VA loans. So I kind of consider VA my specialty. I love working with active duty and veterans and helping them out and buying a home. So that's all I got. I'm easy.
Okay, all right. Hey, so I have done some VA, obviously I've had some VA buyers. Some of you on here are previous buyers of mine. So I have some knowledge of VA, but I got my note-taking gear right here so I can make sure I take some notes too, so that me, myself, can provide you guys with the best possible service possible. Okay, good. So here's the questions. We're ready to go, Matt. You
Let's
ready?
do it. All right. Let's do it. Hit me.
So first question, why are VA loans considered the best loan out there?
All right, so VA loans, by far, from any other loan type out there, FHA, conventional, primarily, or even jumbo, are going to be the best loans out there for a couple of reasons. Number one, and the most important, is you could finance with a VA loan at 100%, which means you don't have to put any money down on the property. There are only the loans out there that can do that as a USDA loan. There are some down payment assistance programs that provide financing, but none of those are going to have as low rates as a VA loan. And then on top of that, with the VA loan, even at 100% financing, there is no mortgage insurance premium. When you're purchasing a home and you're putting less than 20% down, you're always going to have to put some form of mortgage insurance on that loan. Like a conventional loan has a private mortgage insurance, an FHA loan has mortgage insurance backed by HUD, and then VA actually does have a form of mortgage insurance. It's called the VA funding fee, but that can be financed into the loan. So those loans, 100% financing, the funding fee financed into the loan, and if you have some form of a service-connected disability, 10% or more, you can actually have that funding fee waived, which means you don't pay any form of insurance at all, and you can finance the property at 100%. So that's really the biggest reason why the VA loans are the best loan out there. The only other thing I'd say is from a qualifying standpoint, they're also one of the easiest loans to qualify. A lot of agents, a lot of people out there think that the VA loans are difficult to qualify, or that maybe the buyers have difficult credit financial issues that make it difficult to qualify, but honestly the VA loans are one of the easiest ones to qualify out there. So it's one of the reasons why I love doing them.
That's awesome news. Hey, so here's the other thing, right? We got the agents out there on the other side that are not familiar with the VA loans, just understanding that they do offer a lot of flexibility for the veterans. So something good for accepting offers from other people. All right, question number 2. Are you ready?
Yep, let's do it. Next one.
What's the benefit of using a VA loan versus a conventional loan?
Again, I think I'll kind of go back to the same thing I said a moment ago. You know, conventional loans and VA loans, a loan is just a loan. I mean, it depends on what bank is doing a loan, but that loan is just going to be guaranteed by VA, or it's going to have some form of a mortgage insurance premium. A conventional loan, you have to put some form of a down payment down, either 3 or 5% down on a conventional loan, whereas the VA is 100% financing. So primarily the down payment is the biggest benefit of the VA loan, other than a little bit easier, a little bit simpler on the qualifying, and of course the rates. The rates on the VA loans are easily 1/4 to 1/2 point lower than a conventional.
Got it. Okay. Question number 3. Are you ready?
Let's do it.
All right. Any loan limits on the VA loan?
VA loan limits. So a couple years ago, the Veterans Administration came out and they made a huge change to VA loans. That change was that they eliminated the loan limit. So what that means is a veteran can now qualify for a VA loan at 100% financing to as high as they want to go. They want to go buy a $2 million property and finance it at 100%, they can do that. Prior to that, it used to be that anything above that county loan limit, and in Riverside and San Bernardino County, that's $548,250. You exceed that county loan limit, you have to put 25% down. They eliminated that requirement a couple years ago. I believe it was the beginning of 2020. And now you can finance 100% whatever you want. Now there's a caveat to that. okay? This is the one big change. Each county, and we'll talk about Riverside and San Bernardino County because I think that's where most of the people are going to be from. We have a base county loan limit of $548,250. That is the 2021 conventional conforming loan limit. In Orange County and LA County, there is a secondary limit that will go up to $822,375. That, write that down, $822,375. That's what we call a high balance limit. We don't have that high balance limit in Riverside and San Bernardino County. And then everything above that $822,375 in Orange and LA County, or above the $548,250 in Riverside and San Bernardino County is going to be considered a jumbo loan, okay? Now, all that really means is you can still finance 100%, but it's going to fall into a different category depending upon where that loan is, the loan amount is. And the higher the loan amount just means that that loan is probably going to be sold off to a different investor because you got to have an investor willing to take on, say, $1 million loan at 100% financing.
That's a big amount.
That's a big amount. It's a big amount of risk.
Mm-hmm.
So the rates usually, as you go up in step and into a jumbo, tend to be a little bit higher. So if you're at, say, a 2.5 rate on a standard loan below 548, you might be at a 2.75 rate if you're in a jumbo. So that's really it. That's the biggest change.